Welcome back, everyone, to another episode of the Wealthologist Weekly. This is your go-to video source for all things financial, insights and strategies, ideas on building wealth. I am your host, as always, Chris Hobart, also known as the Wealthologist. And today, well, we're going to dig into that topic around the Fed, but this is one a little bit different. We're going to call this one the Fed Faithful. So we're going to ask a question. If the financial markets had to choose a religion, what would they follow? Well, to me, it seems like they'd be pretty devout followers of the Federal Reserve. And the belief would be that the Fed is omnipotent, able to rescue the economy from any downturn or issue. But the question is this faith well placed? So let's dive in, ask questions, and find out. First of all, where is the economy standing right now? Well, according to the Atlanta Fed's GDP Now model, well, we're looking at a solid 3.3% annualized growth in the second quarter. Now, here's the thing. We look at some different models, and our models suggest a slightly lower growth rate of about 2.5%. But both figures are comfortably above the 20-year average. So I guess in our gut, we're going to say, well, things are looking up, right? Here's the thing. Not necessarily. Despite these optimistic figures, there are signs that not all is perfect. The ISM Service Index, for instance, dipped below 50 for the first time since December 2022, which this signals a contraction. Now, this, coupled with a lackluster performance in the labor market, well, this begins to paint a bit more of a mixed picture. But the question is, what about the Fed's role in all of this? Well, it seems the Fed right now is caught between really a rock and a hard place. On one hand, they're facing pressure to combat inflation. We all want that, right? With consumer price indexes up by 3.5% in the past year, yes, definitely, we want to fix that. Now, on the other hand, they're kind of hesitant to tighten monetary policy too, because if they get too aggressive, there's this fear of stalling economic growth. In fact, the Fed's recent decision to slow the pace of quantitative tightening suggests that they're leaning towards really, I guess you'd say, a more accommodative stance. But will this be enough to tame inflation without sacrificing growth? I got to tell you, this is a tough balancing act, and one that is keeping a lot of investors, including us, on our toes, watching what's going to happen. So what's the takeaway for us investors? Well, it seems prudent to us to remain cautious in the face of uncertainty. The market doesn't love uncertainty, can create volatility. Now, while the Fed may have a few tricks up its sleeves, if we rely solely on their ability to navigate choppy waters, that might be a bit too optimistic. Here's the thing. As always, diversification and long-term perspective will remain the key pillars of a sound investment strategy. So that's our encouragement for you. And until next time, this is Chris Hobart signing off. Remember, stay informed, stay vigilant, and stay wealthy.